What's going on, guys? Welcome back to the channel. My name is Matt and I hope you're doing well. Today I wanted to chat about BMO's recent earnings report. Okay, it's pretty clear that high interest rates we've been seeing are really starting to affect people, and they're really showing their signs now. So BMO is Canada's fourth largest bank. Okay, they've reported a rise in mortgage delinquencies during the third quarter, Q3. Now, what does that mean? Essentially, more people are struggling to keep up with their mortgage payments. Okay, BMO's delinquency rate went up to 0.24%, still very small, but to give you some perspective, it is a noticeable jump from 0.20%, and which was last quarter, and 0.15% from a year ago. And it's not just delinquencies that are on the rise. BMO had set aside a whopping $906 million this quarter for potential loan losses. This is basically a safety net the bank is putting in place because they're expecting more people might default on their loans. It's a sign that financial stress is really starting to show among borrowers and people that have mortgages, and the bank's also feeling the pressure too. So BMO's chief risk officer, specific segments of their clients are getting hit the hardest by these prolonged high interest rates. And with rising unemployment and less financial cushion left over from the pandemic, more folks are finding it tough to balance their budgets. This has led to an increase in credit downgrades, meaning the bank is seeing more accounts that they're concerned about. It's also an interesting point there. And the CEO of BMO, who also mentioned that these loan losses are higher than what BMO usually expects. He pointed out that a lot of these issues stem from just a handful of borrowers, but even a small number of problematic loans can make a big impact. He mentioned that for some customers, the combination of high interest rates, economic uncertainty, and changing consumer preferences have really started to hit home. Now, despite these challenges, BMO is still sticking to their guns when it comes to managing credit. They're being proactive, reaching out to customers who might be struggling before things get worse. This includes people with mortgages in negative amortization, which is when the mortgage balance actually grows instead of shrinks. Not a good thing. And currently 32% of BMO's variable rate mortgages are in this situation, which, while better than before, is still pretty high. Okay, now looking ahead, BMO expects a lot of mortgages to renew in the next few years, which could be another stress point, especially if interest rates stay elevated. Okay, but they've also seen a drop in the number of mortgages with more than 30 years left to pay, which is a bit of good news. Now, to wrap this up and to give you a summary, BMO is dealing with some tough times right now, mainly because of the high interest rates and the economic fallout from the pandemic. They're seeing more people fall behind on their mortgage payments, and they're bracing for more potential losses. But they're also trying to be proactive in managing the losses and these risks while working with their customers to try and prevent things from getting worse. But of course, this doesn't mean that things can't get worse. And if you want to know my opinion, this could just be the cracks forming now for the banks, right? So when banks release their earnings and then you see that delinquency rates go up, if we see delinquency rates go up with TD, with BMO, with RBC, with Scotiabank, the big banks, if we see all these big banks start to have more delinquency rates, higher delinquency rates, this means that the economy isn't going to be in a good spot, because that means more people are getting unemployed, more people cannot pay their mortgages. This could in turn lead to a spiral and get worse. So I will be keeping my eyes out on all these things for you guys. And of course, subscribe if you want to be updated with that information. If you guys want to work directly with me, I'll leave my information down below. And until the next video, guys, take care.